The elections are around the corner and the bull market might be around the corner as well, as Bitcoin has reached a new all-time high in euro, not in USD. In this video, we're going to discuss the elections and the potential alt season. When is it going to happen? Everything in this video for your journey through the bull and bear markets of crypto. Let's get started. The sentiment remains to be super bad on altcoins, as we've just seen that Ethereum has continued to make cycle lows. On the other hand, Bitcoin is doing great, as we have seen a rally close towards a new all-time high. So the question is, what's happening and what is next, as next week is the election week. But before we continue with that, a small announcement which we have been doing on X and on Instagram already. As you can see, we are here in our studio at the office, which means that finally I went from my student apartment towards making videos without a camera towards this studio where we are doing more professional setup, which you have been enjoying, as I've seen in the comments. So thank you for that. That also means that in 2 weeks' time, we're going to launch our new podcast, which is New Era Finance. There's one thing you could do to be there. That's the first people to watch those episodes, but also to help me grow that channel, which is going to the description beneath and subscribe to the channel of the podcast. It's a different one. We want to separate the two, but we've already got some top-notch guests that are going to be discussing where finance is going to be heading to, and the first episode is going to be live mid-November. Now, going back to the topic, the ETF inflow has been going through the roof. That is the actual reason why Bitcoin has been hitting or getting close towards a new all-time high. In 2 days in a row, we had almost 2 billion in inflow in the Bitcoin ETF. And since the 10th of October, we had close to 5 billion in net inflow in the ETF. There's one day where you can see that there's no inflow, which is on the last day of October. And that was also the day that Bitcoin started to correct again. Why did that take place? Well, the last day of the month is usually rollover day. Not much of trading, very illiquid. Options are getting rolled over, which is also taking place the week before. So generally, that is a day where you can see a lot of volatility because of illiquid markets. So I expect that with the ETF inflow, it's going to pick up again after unemployment data comes out. Now, that is super positive for Bitcoin, and we've seen that in the euro valuation, we've reached a new all-time high, and Bitcoin basically just popped above the previous all-time high, took the liquidity there, and fell down again. In the US dollar value, that hasn't been taking place, but we are getting close towards that actual bull cycle, and the question is, when is Ethereum and when are the altcoins going to move? That is all depending on macroeconomic data. And this week was the big market mover from the previous month. And it's also going to be the market mover for this month and the upcoming months. And I'll tell you why. First thing, on Tuesday, we had job opening data, which has been the worst in 3.5 years. So high level, the Fed has two important indicators to look at, which is inflation, that is going down, and the labor markets. They want to strengthen the labor markets because then the economy is going to grow. That's their thesis. Now, what you don't want to see is that they have been doing the rate hikes in 2022, that is going to have such a disastrous impact on the economy that the labor markets are going to get worse. So once the labor markets are getting worse, that's going to be the period where the Fed needs to do QE or needs to do rate cuts. And that is where the pendulum that we are moving into. And if we look at those factors, then the job opening data has seen a big miss, and it has been signaling that the labor markets are getting worse, through which the worst data in 3.5 years came out. Now, on Wednesday, we also had GDP coming out, which was also lower than expected. So technically, the economy is getting worse. Now, we need to have a side note that this video was made before the unemployment data came out, the official number. But it's expected that the yields that have been showing a lot of strength in October are going to reverse once the labor markets are getting worse. So that's what we're looking at. And the moment is that, or the important part is that when the yields are going to drop, Ethereum becomes more interesting. And when Ethereum becomes more interesting, DeFi follows along and the entire ETH ecosystem. And then also the other altcoins are starting to move. But at this point, we see that ETH is just making lower lows. And that is the only reason for that is the macroeconomic data. It has nothing to do with Ethereum Foundation selling tokens. It has nothing to do with the amount of progression that ETH makes. It has all to do with the macroeconomic data and the yield hunters just staying into government bonds. But more on that in a little bit. Now, there are some key events coming up. And well, it's not a surprise that the presidential elections are going to be a big factor for the markets. And I've been saying it a few times already. I think we overrate the importance of the elections. I think we are not watching the labor market data at all, but the labor market data are more important than the elections because the labor markets are technically showing what the policy of 2 years ago have given as an impact. And whether Kamala Harris or Trump is going to be elected, the policy still needs to be adjusted from what they've been doing in the previous years. So it doesn't really have that much of an impact. The only big impact is on the short term that if Trump gets elected, is that we're going to see Ross is going to be free. But secondly, is that he's going to push forward with Bitcoin and crypto, as he has been saying his congratulations to all the Bitcoin holders with the 16th year anniversary of the Bitcoin white paper, technically. And he has been shooting to Kamala Harris in his recent tweet where he said that crypto is going to be big again. So that is going to have an additional positive impact to the markets. That if Trump wins, we likely shoot off already. But if Trump wins, there's a very significant chance that the yields are going to drop as well. Because it's likely that he's going to push the economy forward, to print again, and just having a different policy than Kamala Harris had. So that is what we need to look at. And then the day after the elections have been taking place, we are going to provide a new video, of course. But the day after is going to be the day that the Fed is going to announce the rate cuts again. And if we look at it, the expectations are that we are having a 25 bips rate cut, which is already priced in. And the markets are currently pricing in no more rate cuts. And I'll get to that in a little bit. And that's why it's important for Ethereum. And that's why it's important to keep a look at it. Then if the Fed is going to do more rate cuts, or depending on that actual event, it is also important to keep an eye on the amount of liquidity being added into the markets. China is currently pushing it forward big time. But as you can see in the chart that I have here, the Fed is still basically shrinking the balance sheet through QT, but we are on edge of having QE again. And once that takes place, we're going to have that additional liquidity being added into a positive market environment. Now, it's time to look at the charts where I can give you some more background on why I'm looking at these specific factors. The important question is, when moon? We're going to look at the charts next, as you can see a lot of data that I just discussed, or a lot of important factors. You can just see it in the charts. So let's have a look at what we see on the screen. The first thing I've got here is Bitcoin against USDT, which, as you can see, has seen a tremendous move towards the all-time high, but couldn't really break through it. I think the all-time high is also a level where a lot of people are going to be forced to sell or are looking to take profits. A lot of shorts are taking place until it starts to break through it in one go. I think it's just still consolidating. And as I said, the last day of the month is usually a very weak day. And that has been shown, in which not a lot of inflow took place on the Bitcoin ETF. And as a result, we saw a slight correction taking place for Bitcoin. And we are approaching the unemployment data, which is a big factor still for the markets to start moving. But I'll get to that in a little bit. Now, once we discuss Bitcoin in itself, what is important here to look at? We generally don't want to lose this trend. So you want to see that Bitcoin holds above 67 to 69K. If that takes place, the trend is in place. And once we get towards the all-time high, that is going to be the moment that we start the acceleration. So perhaps we're going to have a build-up towards the elections, get towards the all-time high, and then through the elections, we push ourselves towards a new all-time high and the actual breakout. The other case is we lose 67 to 69K, and once we lose that, we are taking all these lows and we are going to take the liquidity, which is likely going to be a significant flush in the markets. And that's why I marked the next level as 61K as the important factor here. But that is also going to push down the altcoins again. Now, I mentioned the chart that is important to look at is the yield chart, which is currently at 4.3%. You need to remember that. That's the 10-year yield, and the 2-year yield is currently at 4.18%. Remember those data points or those numbers, because I'll get back to that in a little bit. Now, this chart has been going up since the middle of September, which is since the actual Fed meeting took place. And likely it's getting into a new high, but what we see here is that Ethereum is heavily correlated to this event. All depending on the upcoming days, but we might be having a massive bullish divergence within this structure for ETH against Bitcoin. So that might be the actual low for ETH is coming in. But if this loses 0.035, we're going to have another 15 to 20% correction and might be in line with Bitcoin dropping to 61K. And that's the final capitulation. Now what we see here is a chart of ETH with two vertical blue lines. The first vertical blue line is on Wednesday, 18th of September. From that point, Ethereum rallied by approximately 11%, and also the altcoins did go up by 50 to 60%. That was the day that the Fed announced the rate cuts of 50 bips. However, the Fed didn't have any forward-looking rate cuts in perspective. The only thing they said is there's likely another rate cut taking place, but they are not expected to do rate cuts in 2025. And based on that, and 2 weeks later, we had the unemployment week, Ethereum started to fall down again as the yield started to break to the upside. So the unemployment data was more positive than expected, job openings, and also the unemployment data itself. And because of that, Ethereum gave back all the gains that it made as the yields continued to go up. And that's why we're currently at new cycle lows. So if the unemployment data comes in, and of course we updated it next week, but at least if the yields are starting to reverse, that's going to be the trigger where Ethereum against Bitcoin starts to go up, and also when the entire market is going to do well. Now, why are these important numbers, or why are these numbers important? Well, as you can see on the screen here, on November the 7th, which is the day that we're going to be having the meeting of the Fed, it's actually November 6th, but this is in ET time, we can see that they are expecting a 25 bips rate cut by 93%. So it's currently 4.75 and they expect it to go down to 4.5. Now that is important, but the markets the 2-year yields are basically packed on all the yields that are going to be happening in the 24 months after today. So if in 2 years' time the rates are going to be higher to like 6 to 6.5%, or the markets expect that, then likely the 2-year yields are going to be somewhere around 5.5 or whatever. With the 10-year yields, it's likely going to be a little bit less. So what we actually need to look at is the perspective that the markets have where the rate cuts or the rates are going to go to in the coming months. Now, if you look at January's event for the Fed, we can see that the markets are expecting a rate cut in November to 4.5. But as you can see that in January, there's only one rate cut expected, which is to 4.25. It gives a 44% chance. And in total, there's more than 50% chance of either one rate cut or just zero. And that is where the markets are going to be moving, and that is where the yields are going to be moving. So if after the Fed meeting, the expectations are that there are more rate cuts going to come, the percentage at 4% is going to increase, and the likelihood of the yields to go down is going to be more significant. And if that happens, We are also going to see the exact same in April. As you can see in April, it's only 35% for 2 rate cuts of 25 pips. And if that is going to change and be more positive in the sense that the rate cuts are taking place, that's going to be the moment where this boy, Ethereum against Bitcoin, is going to move up. So the elections are great. It's going to have an impact, but the more important factors are the Fed and the unemployment data, and that's where I'm looking at. Every week I discuss my next steps going forward, and sometimes there's a lot of things happening and sometimes it's just super boring. And I think that this week and next week are going to be the weeks that are going to be determining where the markets are going to go to. If the unemployment data is more positive than expected, we are likely going to see one final crash and then we go up from December. So that means that we are on edge of having that bull market and the alt season that we are looking for. The important question though, which we're not discussing yet, is how long is this cycle going to last? And the longer that Ethereum continues to go down and the more the Fed is pushing forward whether they're going to do QE, the higher the chances that we're actually going to have a longer cycle, because there's an overall debate of whether liquidity or the halving cycles are more important. I think the halving cycles are super important for Bitcoin, but the impact of that is just getting less and less over time. And liquidity and the rates are super important for DeFi and crypto in general. So my expectations are that we're going to be having a longer cycle than everybody is expecting. So 2 scenarios. One is the unemployment data is better than expected. Harris is getting elected and the Fed is not really into more rate cuts or QE. That is pushing the yields upwards one more time until additional bad economic data comes out. That is likely going to trigger a final correction where ETH drops another 10 to 15%, where we might be seeing Bitcoin going to 61K. The other scenario is that the unemployment data is getting worse and Trump gets elected, which would mean that my next update might be where Bitcoin is going to be around 80K, where ETH has been reversing, and where we might be celebrating the next alt season. So these 2 weeks are basically deciding the upcoming 2 months, the last months of 2024, and it's also deciding the first few periods for 2025. And when it comes to my strategy, I stay into my positions because my fundamental thesis is designed for 1 to 2 years, has not changed. So I'm staying in my positions. You can check my altcoin video where I discussed which altcoins I'm currently in, and I'm just holding them until the markets are going to reverse. Thanks for watching to this update. As I said at the beginning, we are launching our podcast. You can find the link beneath where you can subscribe to the YouTube channel. Thanks again. On the next week, we're going to be discussing the elections, of course, and everything that's happening in the markets. Make sure to be there. Leave a comment beneath if you want to see something else, and I'll see you again in the next update. Ciao.